Crypto.com and the FTX Collapse. The bankruptcy of the cryptocurrency exchange FTX is having a major impact on the entire cryptocurrency sector. Similar questions have been raised about Crypto.com, another exchange that has adopted a similarly flamboyant marketing strategy and celebrity endorsements as FTX. In recent weeks, Chris Marszalek, the CEO of Crypto.com, attempted to reassure investors during a live Q&A on the business's YouTube channel that Crypto.com's balance sheet was robust and the company had limited exposure to FTX. However, Crypto.com investors and customers continue to have concerns on the viability of the company. Watch the video till the end as we tell you everything about Crypto.com and the FTX collapse. Crypto.com and its relation with FTX. Just like FTX, Crypto.com is privately held, situated outside of the United States, and provides a platform for buying, selling, trading, and storing cryptocurrencies. Crypto.com was founded in Hong Kong in 2016 and is headquartered in Singapore. Crypto.com has a native currency called Crow that powers its Kronos blockchain. The primary function of Crow is to enable real-world payments by instantly changing the using cryptocurrency into fiat money, like British pounds and US dollars. Crow was initially created on Ethereum's blockchain and was known as MCO before Crypto.com launched the Kronos ecosystem. Additionally, Crypto.com collaborates with businesses to ensure that Visa cards can be accepted wherever possible. Despite being smaller than FTX, Crypto.com is one of the top 15 global crypto exchanges in the world. With 70 million users worldwide, Crypto.com generated $1 billion in annual revenue for both 2021 and 2022. Crypto.com garnered media attention in 2021 from its significant marketing initiatives. In November of 21, the company agreed to spend $700 million to place its name and logo on the arena that hosts the Los Angeles Lakers, just like FTX did with the NBA's Miami Heat. Moreover, as Tom Brady and Steph Curry promoted FTX's brand, Matt Damon was hired by Crypto.com for its own brand awareness. Both exchanges also teamed up with Formula One and purchased advertisements during the 2022 Super Bowl. The issues. Following FTX's collapse, rumors that Crypto.com was having issues erupted on Twitter. The crypto market was already spooked by FTX, not only because of its quick demise, but also because it was unable to comply with withdrawal requests worth billions of dollars made by customers during a run on the company. When it became apparent that FTX lacked the liquidity required to return users' money, concern grew that FTX's competitors, including Crypto.com, may be the next to fail. To make matters worse, news broke out that Crypto.com accidentally transferred more than 80% of its Ether holdings, or about $400 million in cryptocurrency, to another cryptocurrency exchange called Gate.io in October. This was shocking news for Crypto.com users, especially because Marszalek only admitted to the transfer after the transaction was made public via blockchain data. In response to the news, Gate.io and Crypto.com said the $400 million was transmitted inadvertently. Marszalek explained in a tweet that Crypto.com mistakenly transferred the $400 million to its whitelisted corporate account with Gate.io instead of the company's intended cold wallet or offline cryptocurrency wallet. Gate.io said in its own statement that all assets had subsequently been returned to Crypto.com. However, crypto experts and users did not believe the explanation for the transfer, and several suggested that the transfer was intended to boost Gate.io's holdings prior to the publication of its proof of reserves. Changpeng Zhao, the CEO of the world's biggest exchange, Binance, added to the concerns by tweeting that an exchange moving large amount of cryptocurrency just prior to sharing its proof of reserves is a sign of potential issues. Consequently, market confidence in Crypto.com was affected, and its native token Kronos, also known as Crow, fell by nearly 45% over a week. The reassurances. To address concerns by the crypto market, Marszalek embarked on a media blitz where he looked eager to disprove critics by insisting that Crypto.com was not about to collapse. Over several days, Marszalek tried to reassure customers that Crypto.com's business was operating normally. According to Marszalek, Crypto.com only had a $10 million exposure to FTX, and the exchange had recovered $990 million from FTX. On the $400 million transfer to Gate.io, Marszalek stated that at no point were the funds at risk of being sent somewhere they could not be retrieved. It had nothing to do with any of the craziness from FTX. He further said on YouTube that the exchange was continuing as usual with regards to deposits, withdrawals, and trading activity, and that the company had a robust balance sheet. He also claimed that the company had discussions about the shocking events surrounding FTX and how to prevent them from happening again with more than 10 regulators. Later on, he sent a tweet saying that the withdrawal rate is down 98% within the last 24 hours. Marszalek acknowledged that because of the FTX debacle, Crypto.com and other exchanges have seen an increase in withdrawals, but he claimed that his platform has since stabilized. However, critics point out that his statement is somewhat comparable to FTX's CEO Sam Bankman-Fried claims that FTX's assets were fine 2 days prior to needing a rescue. The same is true of Celsius's CEO Alex Mashinsky, who assured clients of the company's solvency days before it stopped allowing withdrawals and eventually filed for bankruptcy. The balance sheet. To further reassure the digital currency market, Crypto.com provided Nansen, a blockchain analytics company, with unaudited data on its assets. Nansen then utilized the data to produce a chart showing the location and value of those assets. One unexpected discovery from the data was that Crypto.com's portfolio had 20% of the meme coin Shiba Inu, widely known for speculation and based on the Shiba Inu dog image. According to Marszalek, the size of Shiba Inu in the portfolio was simply a reflection of the assets that Crypto.com consumers were purchasing. When questioned if Crypto.com had its own token, Crow, on its balance sheet, Marszalek responded that the company is extremely conservative and that its main sources of funding are fiat and stablecoins. He stated that the business is extremely well financed and has a very robust balance sheet with zero debt or leverage along with positive cash flows. Marszalek has tried to reassure Crypto.com customers that there is no hedge fund activity going on with their deposits and that all reserves are available to meet any withdrawal request. With all the statements, it is clear that Marszalek has been focused on avoiding a run on Crypto.com, which might cost the business a ton of clients and make it the next FTX. Corporate governance. From a governance perspective, FTX was particularly problematic as, despite raising billions of dollars, the cryptocurrency exchange had no board, no finance director, and no head of compliance. However, according to Marszalek, a more conventional corporation system exists at Crypto.com. Crypto.com has a 4-person advisory board along with a CFO, head of legal, and senior vice president of risk and operation. This is probably a positive for Crypto.com. While there may still be fraud or other unethical behavior, at least there are safeguards in place that may help Crypto.com survive the harsh crypto winter. According to Marszalek, the company feels fairly pleased about where they are as a business and operations. The company generated over $1 billion in revenue in 2021 and has exceeded that amount in 2022. The protective measures. Because of recent events, large investors or whales have been less interested in most crypto exchange (CEX) tokens. Crypto whales and sharks have dumped a significant amount of their CEX tokens, leading to sharp price declines. Obviously, crypto exchanges are in a race to stop bleeding. Crypto.com, along with numerous other exchanges, have promised to reassure customers by publishing their audited proof of reserves. The goal of the audit is to independently assure the market that every currency on the network is matched by reserves held by the exchanges. According to reports, Crypto.com recently cut more than 1/4 of its staff, as the daily trading volume for Crow has decreased from about $4 billion to roughly $365 million. These steps are particularly needed as crypto exchanges, including Crypto.com, have taken quite a beating from this year's crypto winter, which has seen a 2/3 decline in the price of Ether and Bitcoin, as well as other cryptocurrencies. All in all, as the crypto community deals with the impact of FTX's collapse and tries to determine the extent of the contagion, keep your capital and investments safe and consider storing your digital currencies in cold wallets instead of leaving them on centralized cryptocurrency exchanges. That's it from today's video. We hope you enjoyed the content of it. If you did, show some love and hit that like button. Oh, and don't forget to subscribe to our channel so that you never miss out on any of the amazing videos that we have in store for you.